Brian, let's reach into the inbox for our emails. This is from Tony. Says, Brian, love the show. Getting ready to retire. I am 66. I own 3 car washes. They make a lot of money, around $250,000 net. That's pretty good. I have an offer to buy for $4 million. Not sure if that's going to be enough to keep my income the same. CPA says...
Wait, an offer to buy or an offer to sell?
Well, I think somebody's going to buy it from him.
Oh, right.
He's got a $4 million offer to buy it from him.
Got it.
CPA says I'm going to owe a mint over $1 million in taxes. Is that right?
Yeah, he's probably got a low cost basis then, I guess. He might have owned them for a long time. They're fully depreciated probably.
Oh, yeah. It says not sure what to do because I like the cash flow. Your thoughts? There's a lot to unpack there.
Yeah, I mean, the biggest problem I think people have is looking at what am I going to do in retirement? I think this is where business succession planning, exit planning, he should have had an exit plan before he got this, or before he offered, before he listed him. I'm assuming he listed him and just get a random offer. But yeah, I mean, if he's got to pay $1 million in tax, it's about a 30% bracket tax bill, federal, state. So if he's selling for 4, he's walking away with 3. If you do the 4% rule and you say, hey, we're going to take 4%. Did he say how old he is?
66.
Yeah, I mean, you might be able to take 5, but even let's say you do 4, he's got $3 million left, right? So if you take 4%, that's $120,000. Well, he was making $250,000. You said,
yeah,
he's cutting.
And that's a concern of his. He said,
right, because he wants to still live his life and enjoy travel or whatever.
$250,000 a year is pretty decent income.
It is, and it's hard. It's hard.
Net.
It's hard to compete with that. So, yeah, I mean, he definitely needs. Tony needs some tax strategies for sure. But even at 4% of $4 million, it's still only $160,000. Now, car
washes pay that well. You make that much money on car washes? Good grief, that's a lot of money.
Well, that's after business expenses, what he's saying.
Yeah.
Right? I mean, I don't know. I mean,
I got a buddy that owns one right down the road, and I mean, during the warm months,
the warm months, they do
and it's
well.
like $30 per car, and they are lined up around the block.
That is good cash flow for them. I mean, a lot of expense, of course. The equipment is very heavy, intensive, right?
Yeah.
So, but you get most of it's real estate. Honestly, the value is the real estate. A lot of that, I'm sure, $4 million is prime real estate on a street corner.
Yeah, probably on the corner. Yep.
Right. And
easy access.
Exactly. So, one of those properties worth $1.5 million for just a half acre of land or whatever. But, there's tax strategies that need to come up with to reduce the taxes. But he also, Tony needs to figure out, what are you going to do afterwards? You're just going to sit there and, I mean, some people do well with this, but there's also a lot of surveys that I'm part of the group called Exit Planning Institute, and they do a lot of surveys of business owners that after they sell their business,
they're bored out of their skull.
Yeah. And they wish they didn't sell the business.
They sit around and eat cheesy poofs and get fat and watch soap operas.
Because they think they're going to work forever and they don't have an exit plan to do something different. It doesn't necessarily have to be another business. Could be working nonprofit. I've actually had a couple clients do that. They're like, I'm going to be the executive director of this nonprofit. Okay, cool. And you're not making a lot of money, but they are busy, right, with their brain and their mind and their intentions, right? They have intent to do something, not just sitting around. Your brain is just like a muscle that will decline by sitting around and doing nothing.
Yeah.
So, you got to have a game plan, and who's going to help you do that, right? Well, I mean, that you got to figure out what you want to do, but on the financial side, we help our clients try to coach them to say, here's the options. If you want to pay the tax, $1 million in tax, that hurts your financial plan a lot, because the $1 million that could be growing, right? In there's 66, you said. So let's say his life expectancy is 20 years. He's 86, right? So on $1 million, he grows at 7.2%. You know where I'm headed with this, right?
Yeah, I do.
You can see my face.
Yeah, I do.
I can see your face. So it's not the $1 million that Tony paid in tax. It's the 4 million that it could be, right? Because let's do it simple math. Rule 72 into 7.2, assuming he earned that over the next 20 years. The 1 million that he paid in tax would have gone to 2 in 10 years.
Mm-hmm.
And if he did the same thing, the 2 million would turn into 4 million. It doubled again.
Yeah.
So is the reason that people come to us is because they go to their CPA or their tax professional and they walk away with nothing. And then they come to us and we show them they're overwhelmed. I mean, we had a gentleman in here, he goes, Brian, that was too much. I'm like, well, you've got a lot going on. I mean, you're selling businesses and selling stock and you're selling real estate and you got all these assets in the stock market and your income's all over the place and you got 3 different advisors. Nobody's giving you any tax advice. I had to throw everything at him so he could at least see there's a lot you can do and you're doing none of it. And you're just giving free money to the government and they don't deserve it. It's your money. There's legal, moral, and ethical tax strategies that Tony can go into, but you have to have time to research it. Is this one a fit? No, this one's not a fit. Let's go to plan B. Or plan C.
Also, Tony didn't mention anything about other retirement accounts or anything else. So there are a lot of variables still.
True.
Yeah.
Right. He might have $1 million in a 401k that will be able to, peel off 30, 40 grand a year after tax. I don't know. Maybe he's got $1 million. I hope he's saving some of that 250 grand, right? He saved it in real estate or a brokerage account, stocks. I don't know. They might be just fine. But the big one is, come up with a game plan before you accept an offer.
There you go. Well, maybe, Tony, you should call Brian. Call Integrity Financial Planning, 866-2-PLAN-4, 866-TO-PLAN, and the number 4.